I want to take a look right now, though, at the action as the closing bell sounds on this June 23rd, 2009. We were looking at the action today at the Chicago Mercantile Exchange. Just heard Joe Keenahan talk about those S&P 900 to see if they rally up through that. And of course, they trade for the next 15 minutes as we close here in New York. I guess that's one of the downsides of living in Chicago. Take a look at the equity indexes here as they settle into a close. The S&P 500 up 0.2%, so holding on to gains at the end of today. 894, your level there. Take a look at the Dow. It is closing lower by about 20 points to 83.19. Of course, these prices do move around a little bit as the market settles. And the Nasdaq closing lower as well, down just about 0.1% at 1764. Remember, tech shares were a big problem today. Telecommunication services and materials were the biggest gainers, though. I want to point out that utility and consumer discretionary stocks led the declines. And as I do this, I am typing ORCL, CNBN, to pull up the Oracle headlines. They are coming in with fourth quarter EPS X items at 46 cents. So Oracle coming out with earnings just now and beating the analyst estimate by about 2 cents. So we have seen actually tech companies beating on the bottom line here, and it looks like Oracle is doing the same. As far as fourth quarter revenue, we're looking at $6.88 billion, and that beats the analyst estimate of $6.47 billion as well. Interesting, because we've been seeing tech companies beat on the bottom line but miss slightly on the top line. It looks like Oracle has beat on both of those. So, with that said, I am going to quickly go back down to the New York Stock Exchange. Stocks had a bumpy ride, but end of the day, well, at least the S&P ended the day up. The Dow down about 20 points. Lydia Thew standing by to help us recap today's kind of rough and bumpy trade. Lydia?
It was a bumpy trade, Matt, and basically a split market, like I said about 30 minutes ago. Look, there were a lot of cross currents, though, a lot of data sort of coming across the transom today. Starting out really with the technical analysts in their notes this morning raising concerns about the 50-day moving average and the 200-day moving average. Now, that's 899 on the S&P 500. We closed below that again today. So it's the second day closing below both of those moving averages on the S&P 500. Katie Stockton and Bespoke Investment Groups raising concerns about that being basically a bearish signal. We also did, of course, have that $40 billion two-year Treasury note auction, which was very well received. You also had, of course, comments from our president on energy, healthcare, Ben Bernanke, all kinds of issues. And also, don't forget the housing data that came out, which came out actually a little bit worse than expected, although purchases of existing homes did rise 2.4%. So how did this all shake out? You saw a rebound in financials. You saw strength in some of the commodity plays like the materials and the energy sectors as you have metals and crude prices on the rise. You saw weakness, though, in the consumer names like consumer discretionary and staples. Now, I spoke with Scott Wren, who's a strategist over at Wells Fargo, and he said to me, you know, even though we're probably going to see a bit of a pullback here, he's recommending that retail investors actually load up on some of the cyclical names because at some point we are going to rebound as the economy improves. And he says that these defensive names are not going to do nearly as well, Matt. So a mixed market today, but that is at least what one strategist is recommending.
Hey, any reaction from the home builder stocks on that housing data?
Right. So, like I said, up 2.4%, although they rose less than expected. Basically, the S&P Home Builder Index had a bumpy ride like the rest of the market, but ended the day pretty much little change. You had Lennar and KB Home rising, while Centex and Pulte Homes fell. Pulte's CEO did have some comments this morning at a conference, and he said that he's not ready to call a bottom to the industry, and basically he expects to see flat sales. So kind of mixed news flow when it comes to the home builder stocks today.